Good morning, fellow Earthlings. I am going to show you guys today how to set up a chart for long-term investment or trading. You do this by setting past price levels going back many years. That way you'll know where price is at compared to all of its history. Well, or all of its history that you can pull up on a chart anyway. So let's get this ball rolling here in just a moment. All right, I am in my Tastyworks platform. It's a really good platform. It's slightly complicated, but most really good platforms are because they allow you to do pretty much anything you want to on your charts and stuff. So I have pulled up Walmart, WMT, and I have set my time frame for monthly bars. That means each one of these red and green bars, each one of them represents a full month of trading. And I've gone back 10 years. I think that's as far back as these guys let you go. Oh, they'll actually let you go back 20 years. Oh, that's nice. Okay, cool. So, you're looking all the way back to 2001. A little bit before 2001. You're looking at back at 2000 actually, all the way to the left. So what we're going to do, and your platform may be different. If you're using this one, you'll go up here to this little box that says no tool. Click on it and put price level. Go find a low and click. There you go. Now what I like to do is I like to adjust it to where it hits as many of these tails and these other lows. It brings as many of those in as possible without being ridiculous. I'm going to adjust it just a little bit by clicking it and dragging it up. What does it take to touch that guy? I don't like it. I don't like it. I'm going to bring it back down a little. Alright, that's good enough. We're not looking for precision here. We just want to be in a close ballpark. Alright, so we're going to click on another price level. We're going to come catch these highs right here. And it hits that 3 times. It almost hit it here. But anyway, that's a good one. It dinked around with it over here, 2012, before it finally broke above it. Looks like 2015 was not a good year for Wells Fargo, or I'm sorry, for Walmart. I was looking at Wells Fargo earlier. Alright, but let's just keep going. Let's set some more price levels here. Let's catch this high here. And let's go catch this high here. And let's go catch that most recent high. Man. Alright, I want to catch all 3 of those kind of together. Alright, now what we're going to do is we're going to switch to daily bars, because that's what we're going to use for all of our setups. And where did I miss that at? There he is, daily. Alright, and you can see that those lines are brought in. Now we're only looking back to something on July. Yeah, July. So you're looking back, 9 months or so. Here, what it can show you. Now I'm going to go ahead and come in. Let's just change this. We're only looking back maybe a year. It won't. Alright. I'm going to adjust that line just a hair so it catches this little tail over here. And that is, that's kind of a core setup I do in all my charts on anything I'm going to trade. Even if I'm just going to make a one-time volatility trade or something, I still want to know what the price levels look like, because this recent down move scared people. And Walmart, as you can see, it went down and up and down and up, and just kind of crazy. And because the whole market crashed, so Walmart went with it, and then it's like, oh, wait a minute, Walmart's going to do good in this. Whatever the reasons are. So, yeah, that's just kind of some basic charting stuff. Let's look at some other people. Let's look at Starbucks. If this causes you to not like me, I'll get over it. I like Starbucks. I don't necessarily agree with their snowflake ideology, but I like their coffee. What can I say? If you don't like it, well, I'm happy for you. Alright, let's go back. Now, they haven't traded for that long. Let's go back 10 years. I don't remember when they actually started, but we're going to go to monthly. And we'll figure out how far back they trade. It's been a long, fairly steady up market. I'm going to put 20 on here, but I know they haven't been trading for 20 years. Or have they? Huh. Well, shows what I know, doesn't it? Alright, they've been trading a long time. Well, I wasn't familiar with them until probably 10 years ago as far as the equities markets go. So, alright, let's go put some price levels on here. Let's go down here to their starting point. That looks good. And it dinked around several years and then came right back down to that starting point. Remember the crash of 2008? That is what that looks like. Let's go click another price level. And yes, I was trading during that time. I've caught a few memorable moves during my trading life. And we're just going to catch all of these turning points and highs. And, I'm not going to catch that. That is where it went back down and came up, but I'm just catching highs right now, mainly. Alright, can I move that line to catch more than one spot and be reasonable? Yes, I can, because that catches that high and then these tails. So I like it. You can mark your charts any way you want to, but that's how I like to mark mine. Alright, caught that high. That looks pretty good to me. Let's go back to daily bars. Alright, so here's where those historical price levels show up on your chart. A price above where it's at becomes what they call resistance, and a price below it becomes support. And as you can see, That line is probably from many years ago, and it's not falling in there quite where I want it to as far as recent, so I'm going to just drag it down. And that was a turning point back here. I'll adjust this little dude up to catch both of those. Alright, so I think I'm going to add one. At this price point here, because it catches all these lows, sort of. This one here catches this one almost where it retraced. All right, now we're going to zoom in. All right. Now I'm interested in a 50% retracement. You're going to hear me talk a lot about that because that is one of the most valid things you're ever going to hear as far as known things that are probably going to happen. Is a 50% retracement, up or down, long term or short term. That is like a pivot point in price. Fibonacci retracements, I'll talk about that another time, but I want to see what 50% of this down move looks like. So, and I'm not going to leave this on my chart. There's your high to low on this panic move. And Starbucks has retraced 50%. I'm going to put that on there for the moment. There was the 50% retracement here. And that's where we're sitting. We closed above it Friday. Today, I don't know. That green there, I believe, is going to be the start of today for the pre-market trading. It should be happening right now. So, yeah, it's redone it. So that's a critical time. So if it doesn't hold up here, you'll look for it to go 50% from this low to this high, which is probably somewhere right around that 38.2 Fibonacci line. When you start playing around with Fibonacci's, you'll see that they will fill in your price points for you a lot of times, and that kind of validates the importance of them, at least in my mind. All right, I'm going to remove Fibonacci off of here. And if you're using this platform, you just highlight, click it, activate it, and then hit your delete key and it'll go away. Alright, so there's what Starbucks looks like. Let's go look, or yeah, that is Starbucks. Let's go look at some indexes. Here is the S&P ETF, the SPY. The symbol is SPY. They are the Spider S&P 500 ETF Trust. That's basically a futures converted to a stock so that you can trade it in your retirement account. All kinds of cool stuff these days that you can trade in your retirement accounts. You can even trade a down market if you want to by using inverted ETFs, and that'll be a much later time. Get a taste of my Starbucks there. All right, I had already marked this one, as you can see from these lines that are on here, from the high to this panic low. And this market, if we put Fibonacci on there, you'll see it has retraced 50%. All right. And there you go. You can see your 50%, and that's where we're living today. And that's why I don't leave Fibonacci's on here, because Fibonacci's also give other price levels, and so the chart reflects that and then adjust. accordingly. So anyway, that's why I don't leave them up. It's very annoying. There's probably a way to customize them, and I'll figure that out, and then I can leave them on there because I like them. But anyway, as long as I can see where I'm at, this was the 50% retracement from this down move. So from my way of thinking, that becomes a very pivotal point. And a close above that, again, is very positive for the market longer term. And like I've said all along, this market will probably go back where it was sooner rather than later, or will at least put in a uptrend to get there in a reasonably short amount of time. We made America great again once, we'll do it again, because there was nothing economically driven to cause this. And yes, I understand that there are things wrong in the US. Debt being the number one issue, and deficit spending. Gotta get that crap under control. That needs to become a campaign issue. I think Trump wants to, but I think his hands are really tied because he's working with so many. He's the Lone Ranger. Nobody's on his side except for a handful. And that's unfortunate. But we're not going to talk about politics now. Let's look at one more. What do we want to look at here? What do you guys like to trade? How about Mickey D's? Oh man, I have switched to an option mode here, but not on purpose. Let me get back on a chart here. We're going to look at that option stuff later. McDonald's. That has been a pretty good stock for a long time as far as just pure investment. Whether you like McDonald's or not's another story, but let's set some price levels here. You know what, let's just do this right. Let's look at monthlies. Alright, so now we're looking all the way back 20 years. Let's put some more. Let's go catch this 20-year low. And it looks like it hung around up here for a year or so as a high. This is back when the market traded in a lot more narrow range than it's been doing for the last few years. Let's go catch this high right here. That's a pretty important price level, I'd say. So let's just keep going. You're marking these back in history, and you'll notice how they kind of come into play in more recent times. You know, that price level there was close to being the turning point on that huge down move. So let's don't forget we're looking at monthly, so let's go back to daily. And then let's hone in. I think we need to mark this price high just to have that in there. And there's probably also ways to change the colors of these things. Let's just see. Yeah, I'll have to play with that, but what I normally like to do is my price points that I set on a monthly chart, I like to actually make those thicker and color them a different color, because those become long-term price points, turning points, whatever you want to call them. Anyway, let's just do one more. Let's do Roku. Everybody's familiar with Roku these days. So let's go back to monthly. Have no idea how long they've been trading. And that is it. They've been trading for a couple years. So that is their history right there. So let's put some price points on there. Price levels. Let me pull him up just a hair. That was a turning point at one time. This one right here. That was a kind of a key point in history. And let's go catch the extreme high. Alright, now let's go back to daily. Looks a little more normal now, doesn't it? But that's where you can kind of see when you dive in. Alright, so there was your panic move from in here down to here. I see no reason to change that. Doesn't look like that one's retraced 50% yet. Let's put Fibonacci up there and see. And we're going to go from here to that low. And yeah, that one has not hit 50% yet. It's up here above 110, so I don't know, 113, somewhere in there will be the 50% retracement on that one. Alright, so let's get Fibonacci off of there. Alright, we could mark that if we wanted to. Let's just do that. And it was somewhere right up in here. Like I said, I'm not really looking for precision on where these are at, because I'm not a day trader. You know, a day trader would go in here and look at a 10-minute chart. And you can see those lines are there. Here, yeah, that's definitely a pre-market trading here, pretty thin. If you ever place orders on the pre-market or the aftermarket, don't use anything but limit orders, because those guys will ride your horse for you. Those guys sit there like vultures, the market makers, because the trading is really thin. But people who couldn't get out before the bell that want out, maybe they're going to have a margin call or something if they carry their position overnight. Of course, if you're trading like that, to me, you're already in dangerous territory. So, all right, that's just basic marking up a chart with price levels. I think the next lesson we'll actually look at trend lines, and we'll mark those. If you learn these basic things about charting, I mean, literally, setting price levels is all you really need to make decisions if you're longer term investor, swing trader, or actually investing in the market. So day trading is a completely different thing. I don't teach day trading because I don't day trade. I have successfully, but the urge to jump off a bridge hits every once in a while, so I decided that wasn't for me. Anyway, you guys have a blessed day, and we will talk again. That's a promise and a threat.